Very tentative, as you would say. I mean, you kind of wavered around the flat line a lot. What's interesting to me is the psychology of it, because you would look objectively, not knowing where the market's been recently, and say, oh, breadth was about flat. Half the stock's up, half the stock's down. Not a big move in the major indexes. The Dow was down mostly because of one stock. No big deal. It didn't feel like no big deal because we're seemingly at this kind of somewhere near a make or break point. You know, people are wondering if the index is going to give back that final 3 or 4% to go to those old lows. And I think that that's the nature of one of these kind of high stress environments with the market, where it's not doing much, but the failure to bounce hard, I think, is making people a little bit nervous here.
But the headlines, Mike Santoli, on China, were they just too small a headline, not significant enough of a development for people to take stock from, or is it just such a weak market that even the biggest risk factor improving wasn't enough to make it?
I think they felt a little bit convenient and a little bit without too much substance behind them in terms of the potential renewed trade talks. I mean, we're talking about after the Dow went down 600 points on a day, we get reports of a phone call on Friday. Right. So that doesn't really necessarily seem as if this is a lot of momentum behind whatever trade deal negotiations are happening.
Michael, in terms of where we go from here, what's your view in terms of the general level of sentiment out there and whether you can be buying again or not?
Look, I've been positive on U.S. stocks for a couple of weeks now. I wasn't. I got more positive. So days like this give me pause. Why did I get more positive 2 weeks ago? Because I thought things were beaten up enough, and sure enough, that worked out well. But now we're seeing this downslide again. Let's look at this morning. You know, I woke up this morning, and futures were up around 16.5 points. That's the S&P futures, which is what I watch, not the Dow futures. And, you know, here we are closing the day, and they're down slightly. The NASDAQ is flat. What's going on here? There's this pain. And this is all about a pain trade. 2 weeks ago, I got more positive because I thought the pain had subsided. Sure enough, that happened. But now we have this new wave of pain, and its name is oil. I've been negative on oil for a while, and sure enough, you have Morgan Stanley abandoning their $85 WTI target last week, and here we are below $55. And you have everyone backpedaling and moving. And a couple of days ago, I assessed the market, and in my note to clients, I said, you know, I'm starting to get more positive on energy stocks. I've been underweight for a long time. The problem here is that when I start reading about people's third quarter outlooks, everyone's getting more positive on energy. I don't like the company that I'm in right now. I'm reading investor letters and I'm seeing these commentary, well, maybe there's a bottom now here at $60. Not quite. However, a day like today, I look at it and say, maybe this is time to look among the wreckage and finally get a little more positive. But for today, it's all about pain.
Is $55 oil or $65 if you're talking about Brent, which is what gasoline prices are going to be tied to? Is that really so bad? Isn't that still going to be a net positive for the consumer?
It should be a net positive for the consumer, but, you know, we're talking about the stock market here. And by the way, you know, last night, if you would have asked me, what's your favorite trade, you know, if you could put something, I'd say long retail, long U.S. retail. It's a conversation I had with a macro fund manager last night. So that happened in real time, and I still feel that way. Yeah, that should be good for consumers. The problem is looking at the markets here, looking at everything going on, there's this pain. If guys were buying energy stocks a couple of weeks ago, they're not very happy right now, and they're feeling pain there, and that pain's being felt in retail stocks and tech stocks and everything else that they own.